Eric Mother.com. I greet you in the love light of the one infinite creator. So for October 28th and 29th, 2023, let's take a look at markets here with about 10 minutes to go. We are down for the day, down for the week, and we'll take a look at the charts and see what they are going to be telling us going into the next couple of weeks. And so that's the general market. Take a quick look at BTC. It is trading at about, let's call it 33,690. Just take a look at the summary for the week. We can see markets are down. S&P 500 down 2.3, NASDAQ down almost 3%. By the way, this is also the same number, give or take a few percentage points, that the NASDAQ was down last week. So almost equivalent percentage down weeks back to back. And we can see BTC is up currently about 12% for the week, and Ethereum up about 6% for the week. Let's take a look at those charts. So for the day, we can see the Dow is down the most, and I could say, from my understanding, this is because the RSI for the Dow dropped below 30.9 today. And so when you drop below 30.9, which is the exact opposite of 69.1, you tend to have a reactional move. In this case, because you're moving below it, you're going to get a reactional move to the downside. So that makes sense. And you tend to close towards session lows. All right. So same thing can also be said with the S&P 500. I believe it cracked below RSI 30.9 yesterday and stays below 30.9. So this is consistent with below 30.9. Now we have this emerging look where we could be setting up for this crossover. In other words, if the bearish scenario is to play out, then all of these bearish divergences are going to take place, or bearish crossovers are going to take place, and the market should see lower prices. So there's a risk in this market that there is a possibility of lower prices, but I caution you, and I caution everybody from running into one simple conclusion that we have nothing but lower prices. Now, one of the scenarios that was bearish that I mentioned in the last couple of weeks, I believe last weekend also, was if the Dow slips below RSI 50 for the month, expect this market to slide lower, and it is doing exactly the same, and it is now with the RSI below 49. So at this rate, we can say into the middle of next week, when we move into the month of November at the earliest, it won't surprise me that the market is going to be trading in this range, in this lower range, so that the RSI can close below 50 for the Dow. And to also add momentum, SPX, I believe, is also drifting just now, or let's say today, drifting below RSI 50, which again means generally that you're going to close towards the session lows. In this case, it's a monthly chart, so you're going to close towards the lows of the month for a big down month in terms of percentage points. And the NASDAQ, since it's not yet, but is getting very close, could also be looking to close with its RSI below 50. So NASDAQ is trying to hold above 50, but at this rate, if the RSI for the NASDAQ also slips below 50, expect the market to close towards session lows for the month of October, which could mean sideways to lower from here for the next couple of days at the least. So again, the biggest risk in this market that I can see here is showing more and more in the bigger time frames, with the RSIs dropping below 50. But at the same time, let's also not forget that this is a market that is pushing us to take the bearish view. And we can see that there's a possibility that in the new month, if we close below 50, in the new month, we open the possibility for a sharp reversal to the upside if the market reclaims RSI 50 month to month. So this is the S&P 500 monthly. Now, I want to draw a line again. Another reason why we shouldn't necessarily believe that the market has only one option, which is down. There's also the likelihood that the market is just simply coming back to test the RSI lows line on the monthly for the S&P 500. So remember, this line held last year and could be coming to test this line. We shall see. Now, there's also another view that we should consider going into the new week. So for sure, we've seen this market roll over, and with the threat of lower prices. So that's a fact. Everybody's assuming that this market has lost momentum and is now poised for lower prices. But keep in mind, we come off the lows here, for the NASDAQ especially. The NASDAQ was the one that was threatening fresh lows late 2022, early 2021, but it did not make fresh lows. So just keep in mind that these were the lows, or important lows, for the NASDAQ, and then we had this move higher for 2023. So what we can do is take that information and draw our uniformity line as such. And without adjusting for anything, we can see the market is definitely going to have to decide what it wants to do here. Now, if it finds support here, then this market will gonna start grinding it to the upside. So the weekly charts is giving us a little bit of a possibility of support. Keep in mind the lines I have been drawing. This line here, we can say, was broken over the last 2 weeks right here. So there's a break being shown on the market. At the same time, the possibility of support coming from late 2022, early 2023 lows for the NASDAQ is also possible. So a bounce week to week is not out of question. Keep in mind, if you take a look at the Dow also, giving us a little bit of a different way of looking at this. So let's begin with the break. So we can say that this is a break. Let me draw this. So connecting the lows, this is the line I've been using here. It looked like we were going to find support, and we're finding support here. And over the last 2 weeks, we turned down. And so this we can say is a break. So that opens the possibility for lower prices given that break. Now, again, I believe what the market is doing is testing these lows here from a sentiment standpoint, because I use the RSI to gauge sentiment, or as a way of calculating and generally trying to find a feel for the sentiment. And I would say that the market is coming back to test this line here, this area. You can draw it that way or even lower. So we figure out, so this break point here, we can even draw it that way. Remember, this is where we come off this level, and market hasn't been back to those levels. So if we hold here, now it might be that it's not just a V-type recovery. Sometimes you go through a double bottom or triple bottom. So the market can do various ways of confirming resistance. But all I'm saying here is, given the formation that will take place, if the market ends up using this as support week to week of any form, then eventually we start moving higher. Now, of course, I need to mention here that we have the glaring, obvious bearish look here of the crossovers taking place between the moving averages for the weekly chart there for the Dow, just like we had a bullish crossover here, which led to this move here. And previous to that, we had a bearish crossover, which is this crossover here that led to this move here. So the crossover in itself is telling us momentum is leaning lower, and the market does need to find support immediately or around here. Otherwise, this is going to develop into a more bigger drop to the downside. So that's one line to consider. The other line is the top side line. If I draw it as such, and what this line gives us is there's a break. Let me change colors here. So what this gives us is this prior line, and we can see that, so the prior highs, and this is what could be tested or what the market is coming back to. So they're connecting the highs there. So the market did just close, and we can see here that there was a breakout, which is here. And then we've used this for short-term re-entries back into the market. So again, so what I'm saying here is obvious here, that if the market can bounce on the two lines, the blue and the green line, then week to week, actually, the market sets up for a recovery, even as other chart characteristics are suggesting lower prices. And S&P 500, 3-year weekly, same thing here. The two lines are intersecting where the market closed for the week. So you can see that this is an area I would be watching with interest, whether we are going to bounce and begin the gradual recovery, or the lines have no traction and we break. And if we do, then we are going to be seeing even lower prices with a pickup in pace to the downside. Taking a look at the VIX, we can see that it is above the breakout level that we've been discussing at 19.98. So even though it spent a day below that level this week, but it has moved back above the level. So as long as the VIX is trading above 19.78, then I would assume that this market still has downside pressure. And the VIX did record a recent daily closing high, which is also a level to watch, because if it can break out again, and I believe that level is at 21.71. So another breakout by the VIX just means the market is going to be pushing lower. If the VIX is unable to break out again, so let's say if the VIX is sideways here, and ultimately if the VIX was to drop below this breakout of 19.78, then the market would be looking to go higher and the VIX go down. Now, one thing I can say here is the VIX has been making higher highs, but there's this feeling that even though prices are moving higher, we are still seeing this formation on the RSI continuing to show negative divergence. By the way, also on the weekly, interestingly, the VIX did close for the week down for the week. Yeah, down slightly for the week. And if you take a look at this area here, draw a line, which is at about RSI 61.8. This is where the VIX historically, or the last couple of years, has been stalling. If you consider where the VIX has come off and pulled back, and all of these were basically re-entries back into the market that was pulling lower or pushing lower. So all of this, I don't need to draw all of them, but you get the point. So again, we see that the VIX is in this general area. It needs to clear this line if it's gonna push higher, and if the market is to go down. But otherwise, the more this line is confirmed as resistance week to week, then we're looking at a VIX that is gonna start rolling over to the downside as the general market starts recovering. Also, on the 4-hourly for the VIX, just the structure here, you can see this high corresponding with this high, There's a high there corresponding with this price high, and then there's a high here corresponding with a higher price high, and another price high here corresponding with this high. But you can see here on the 4-hourly, all of this is coming with declining strength. So that tells me that if the VIX starts rolling over, this is going to be consistent with declined energy as it's been going higher. So it could conceivably be looking to pull back. The way to correct this is not that complicated, is you need a breakout on the daily, and to clear this divergence line, you clear that divergence line and you really pick up momentum to the upside, which would mean the market would be headed lower in a big chunks. Taking a look at the Vanguard total stock ETF. So this is going to give a representation of global markets as a group. And we can see here it is down for the month, a big 4-5%, because the RSI is dropping below 50. And so we expect the market to trade in this range below 50 on the RSI and stay below that into the end of October. Now we start looking at what is the possibility for the next coming months. And this chart gives us a good representation. So remember in 2020, early 2020, we had this movement below RSI 50 back above it with uniform activity. And of course, this was very shaky, big down days. And we can see that ultimately there was a strong recovery. Market was soon trading at new highs, surprising most of us. Again, it says here uniform activity here in late 2018, support back above RSI 50. This was messy, and we can see here ultimately double bottom. You recapture the level above RSI 50, and before you know it, you're back to new highs. We can say at least by the end of the year. And we can see it again here in 2012, and we can even say this period here. So what I'm saying here is, yes, we are down for the month, but we have to understand that markets don't always go up in a straight line. So this is not out of the realm of possibility, even as we have to respect the possibility that the market has the option to continue doing this. So we respect both sides. All we can do is track the market from moment to market, from moment to moment, and make our decisions accordingly. Which brings me to VT on the weekly. And since I've discussed this on the other charts, take a look at the RSI. So my thinking here is we are testing these lows from late 2022. And so support on the line means that this is a market that is going to be building and start gradually building to the upside. And of course, if we can't hold, then this means that global markets as a whole are going to be trending lower. And of course, quick representation here of a bearish crossover that took place in early 2022 before we saw this big drop. And of course, as I mentioned in another chart here, we saw bullish crossover, which led to this move. And now we are seeing another bearish crossover. So we also have to respect the possibility of lower prices because of the formation of some of these charts. We have to take things as they come. And if these charts are not recovering, then the market is definitely poised for lower prices. So if you want to look for bearish charts, I can give you there's a lot of bearish sentiment on these charts. Take a look at the NIFTY here, and we can see that there was a 2-week breakout, nice 2-week breakout, but that ultimately led to a failed breakout. As we see here, it failed. And to make things worse, we tried to recapture that level twice here in the last 2 weeks and failed. And then there was a break of the lows of this area here. So lots of bearish formation here. And so lower prices would only make sense, right? Now, let's go back to this period here. We had something similar. We had a failed breakout. We break down below this area here, which is here, which is this break right here. But notice what saved it is we eventually recover. And if you squint, you'll see this eventually formed a double bottom around RSI 50. This is a weekly chart. So of course it took a couple of weeks, but ultimately we move above the break line and go high. So what I'm saying here is watch the possibility of this area could be support on the weekly. And ultimately, if you can recover above the weekly closing lows from August, so this weekly closing lows, if you recover above the weekly closing lows, then this market could be preparing for a recovery move. So that's the Nifty there on the weekly. I wanted to show you the stock. Take a look at a long-term monthly chart for the Nifty if you're looking for some bearish look. So depending on how you want to look at this market, improved prices here. Take a look at your technicals. This is a monthly chart. Huge divergence there. Take a look at the divergence as you made move to all-time highs. So if you really want to be bearish and be bearish for the next couple of months, if not for more than a couple months, maybe even going to a couple years. This is a very bearish looking divergence on the monthlies and on the monthly RSIs and MACDs. So that is something to consider. Now, I need to point out that yes, there's divergence, but what markets do is they cure the divergence. So what the market would need to do here is if it wants to go higher and stay higher, it needs to break out above this divergence line. Same thing with the MACDs. If the MACDs are to eventually give us some type of a momentum bullish signal, they would have to break out above the divergence line. So that's a possibility, but for now, I have to say, we're really staring at divergence here that could lead to lower prices for the Nifty, depending on if that divergence is not broken. Because remember, if you go back to late 2019, you got this divergence here as you made lower improved prices, and you see what happened here is eventually led to this massive plunge right here. And so we are forming something similar. So we cannot say that the market is not giving us a little bit of an insight of a possibility that things could really develop into a bearish market. Now take a look at BANKNIFTY. By the way, most of these charts are available if you go to martha.com and click on the charts link. So they should be available to you if you're interested, just to see what they look like during the week. But this is the BANKNIFTY 3 years, and what we're going to do is just understand where we come off the lows of early 2020, which is this period here, and draw our line, RSI line from here. So that's what we're going to be looking at, because there's a lot on this chart. So but what I'm trying to impress upon you here is that even when markets look like they were breaking down, this area has held. It held here also in April, March time period, and now here we are again. So what I'm saying is it gonna always hold? Of course not. But if it holds, we really have to understand that the market is gonna be stabilizing here, and that the BANKNIFTY and possibly markets around the globe start stabilizing around here and coiling to the upside, with the understanding that if for the first time we stay below this line and stay in this area, which is something we haven't done since early 2020, if we stay below this area, then markets are poised for a substantially bigger drop. And that's the BANKNIFTY 3-year weekly. Canadian market, the TSX 3-year weekly. Line number 1, a possible line to consider. Line number 2 is coming off the lows here from 2022, which is this area here. And the lines are just above RSI 38.2, which means we can take notice of what happens here, with the understanding that if we end up finding support, then actually this is just setting up for a recovery move. And of course, if we cannot hold and we break, be on the lookout for lower prices. The dollar having another positive week, and I'm going to draw the line I've been drawing here. And as long as the dollar is holding this and trading above this weekly support line, I would say just let it trade sideways to higher, because in theory this is where it should have stalled if it was going to stall. But now this line is actually being used for support, so we have to assume that this is still sideways to higher as far as the dollar is concerned. Taking a look at GLD, we can see that there was a period a couple of weeks ago when gold looked like it was definitely broken. This period here, it looked like it was broken, right? This break. But this is the weekly chart. Take a look at your monthly chart so to understand how monthly charts play a role. And you can see that all that was just testing RSI 50, which it did with uniform RSI 50 uniform support, big down month, followed by a big up month this month as the RSI 50 was tested. So all I'm saying here is the general markets could also have the same situation in the coming weeks, coming months. On the daily for GLD, the RSI is above 50, above RSI 69.1. So as long as the RSI is above 69.1, this could still be sideways to higher day to day. And it's hard to say that the dollar and gold are looking to be sideways to higher in the short term. But if I was to pick, I would say more than likely, in my opinion, because of this very strong V-type formation, this could run out of momentum at any point for a pullback. And also we discussed the possibility of this line, you can do it this way. If it ends up rolling below this line here, then that's going to be where we start seeing a pullback. Or we can also say that there's this break point here. Let me draw it that way. So that blue line is where we pull back here, resistance. And so if we end up also recoiling back below the two lines, then this is where we see GLD pulling back. But for now, with the daily RSI above 69.1, momentum day to day is still to the upside. XLE, just like the market, had a big down week, consistent with dropping below RSI 50, consistent with ending towards the weekly session lows. So that is all you would understand with the RSI. Now keep in mind, we had something similar happen here, turned out to be RSI 50 support. So the big question is this going to be used again for RSI 50 support? And we have a snapback rally in the coming week. Well, that is something to consider. Now, this is the weekly, 2-year weekly. If I go down about, let's go down about 5 years of weekly data for the XLE and just draw this line. This is the weekly, 5-year weekly. And so you can see we are coming back to test this line week to week. So, of course, below the line is bearish. Support on the line is definitely going to be leading to a snapback move for XLE. So last week I talked about crude oil. By the way, crude oil was higher on this Friday, was up about 2%. But if you take a look at the weekly chart, what I was saying last week is for there to be momentum, we would need to see a push above the recent weekly closing high, and that is at 90.79. So a breakout is needed if this is going to push higher. Otherwise, I would anticipate we are still trading in this range right there. And you can also confirm that if you take a look at the daily, just because the daily is, you can see we are trading around both the 50 and the 200-day moving average. We've been in this range for this week. In fact, let me do it. So this week we spent most of the time trading between the 50 and the 200-day moving average, which suggests to me that a market that is still sideways, what is needed here is a weekly breakout above 90.79. Take a look at ETH on the weekly, showing a 6%, 7% gain for the week as the RSI moves above 50. So we know that that should make sense, consistent with moving above RSI 50, but has lost some of the upward momentum as the general market has pulled back. Now, where is it going to stall? Well, this could be a possibility. This line here could be an issue. In fact, I can even draw it this way. This is where we broke down in August, and I believe that is going to be tested. If we show resistance and back below 50, expect a big down week for the cryptos. Otherwise, Ethereum has the opportunity, if it wants to clear this line here, which was the resistance and a break point right here. So above the blue line, cryptos could see another positive run. Otherwise, resistance around here week to week, then the cryptos are done for now, and there's going to be a pullback in the entire space, which brings us to the monthly chart for Ethereum. And we can see here it was moving above 50 at some point this past week, but the RSI is now back below 50, so we don't have that momentum. If there's going to be a strong push to the next couple of days as we go into the end of the month, then Ethereum has to move above RSI 50. By the way, I should point this out. If you're bullish on the cryptos, then in a sense, you'd want Ethereum to close with its RSI below 50 for the month. So the new month of November can have the opportunity to blast higher as it moves above RSI 50. BTC on the weekly, currently showing its RSI at above 69.1. So this one, or BTC, still has some good momentum, even though it's been pulling back the last couple of days. We've cleared this area here, which is encouraging for crypto bulls. And especially if the RSI can stay above 69.1, then there's a possibility of prices moving higher. Now keep in mind on the daily BTC, even with the pullback over the last 2 days, the RSI is still trading at about 80. So the momentum here continues to be strong. I would anticipate that the possibility of the following happening. So we could get a pullback here, look like that, make higher highs, and the RSI could do something like this. And it's the future negative divergence down the road that could lead to a pullback in prices for BTC. But for now, I would say, given the fact that the daily RSI, not the price, the daily RSI has remained above 69.1 for this period here, then more than likely we might see another push higher in the coming days and in the coming weeks, to go beyond these current highs of about 35,000. Like I was saying last weekend, this was a good period where we held above 69.1, and that was not the high. The high comes later on right here with the divergence, which brings me to the monthly for BTC. All right, so on the monthly, we are pushing above RSI 50, and we know the drill here. Above RSI 50, you have a big up month. For the month, BTC is up 25. And now, of course, it cleared this area here at about 30,400-ish, which is the prior 2023 monthly closing high. So for now, momentum is still to the upside for the cryptos. Is it the strongest ever push? No, because it doesn't meet the minimum requirements for the ultimate Monday breakout. And also, there's a possibility now that we've had this move that this area here is what is being tested. So yeah, markets can be complex. So this is the break point in early 2022 here. And it could be that we are rallying to the end of the month, and this becomes a possible area for rejection. And we see the next big monthly move down. Otherwise, to correct this, what cryptos need to do is stay above this area here, which was the break point right here. That breakpoint, by the way, comes all the way back from this breakpoint, we can say here, right there, which also means, by the way, if you saw that blue line, it also means that this could also be a very possible area for rejection. Otherwise, to correct this, and if cryptos are gonna see another push into the end of the year, then this RSI needs to be above this line, and of course, which is coinciding with this previous breakpoint. So above the blue and the red line is what the bulls want to see. Otherwise, more than likely, if we can't hold above the two lines, then we are looking at cryptos here definitely going to stall month to month, and we see a pullback because of the two lines offering monthly resistance. These are the closing numbers for October 27th, 2023. We'll have to wait and see what the month of November brings. I am Eric with Mother.com. I leave you as I found you in the love light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator. Adonai.